the Money Talk Viewpoint. I'm Chantel Leeson, your host. We're the talk show for investors and financial professionals who want to have that opportunity to provide the best opportunity for you to make the most of your money. I have guest speakers on my show every month, and we look for opportunity to show you something new to grow your wealth. Today, I have the privilege of having Victor pronounce your last name for our audience.
It's Chukwuemeka.
And tell them, now Victor lives in England, so tell them where you are from and where you originate from.
Right, so my parents are from Nigeria. I originate from Nigeria, and that's where the family comes from. But I actually was born in Switzerland. My father was a cardiologist. He was a consultant cardiologist and went to study in Germany shortly after the war, Second World War. And I was born in Switzerland, quite some time after that. And I moved to England to generally go to boarding schools here. And I grew up here. It's a fantastic place to live. It's a great place to be. It's a really good place to educate yourself as well. Education in the United Kingdom is free, but if you choose to pay for it, you can pay for it. But yeah, I grew up here. It was fantastic. Had a great time. Went to university, started my career out, which I'll talk about a little bit later. And yeah, but that's where we're from. But we are now naturalized British citizens. Not quite denounced our Nigerian roots, but we always have to remember those. But we are British citizens, myself and my brothers and sisters, my siblings.
Well, tell me, listen, now, where'd you go to university?
I was at University of London, so I studied economics. My bachelor's was in economics, and I graduated and went straight into the investment banking shortly after that.
And who did you work for?
I started working at Lehman Brothers.
Oh, okay, wonderful.
Yes, I started working at Lehman Brothers. Yes, so just way before the crash. So I started working at Lehman Brothers. I was there for a short while. One thing I wanted to do was to have a really good training experience in an investment bank that allowed you to sit and train I generally thought that the Lehman Brothers graduate training program was very rigorous. It was very, very rough. It was very sort of so quick. So I got a phone call from Barclays Capital to work as a foreign exchange trader. And that was where my sort of career took off. I was trading something called spot foreign exchange, trading dollar Swiss franc. So I was trading sort of tens of millions of dollars every day. I was on what they call the B desk. It was great fun. I had great people to work with. It was a very, very fast-flowing market. Most of the stuff came out of the US, or sales figures and interest rate figures and all that sort of stuff. And that's where I started to learn my education, how to think quickly on my feet, how to look at numbers. Numbers is my most important. I love numbers. This is why I'm here talking about money to you. So that's where I started. Yeah, foreign exchange trading at Barclays Capital.
You know, and you also went on for your PhD. Now, tell us about where you went to go for your PhD.
Right. So my PhD actually started when I was very young. I was about 17, 18 years old. And I thought to myself, because the European countries were thinking of having one exchange rate and one interest rate. This was the start of what they were thinking about merging these two tools together. And I thought to myself, at the age of 17, didn't really know that much about economics. But one thing I did know is that if two countries have the same exchange rate and the same interest rates, if an economic shock happens, how are those two countries with the same economic tools able to adjust themselves properly to be able to get out of any mess that they're in? And I promised myself that someday I'm going to study it and make sure that I can prove this phenomenon to be absolutely accurate. And I waited about 30 years later. I finished in the investment banks and I said, well, I'm going to study a PhD because now there's more than enough data to be able to do this. So I had 10 years data before the EMU. So that was 1989-ish to 1999. The EMU started in 99. And I had 10 years data from 1990 to 2008, 2009. And I did a comparison between both sets of figures, both sets of timescales, to see how countries adjust when economic shocks happen. So if a country adjusted better after the economic shock, it showed that, well, they didn't actually adjust, but they showed if they adjusted better before the economic shock, it showed that the euro was probably not the best thing to happen. Because if you have a common interest rate and common exchange rate, how can you adjust your balances sufficiently enough when maybe, say, Austria needs to increase their interest rates by 5%, whereas Germany only needs to 3%. So where are they going to go? So I knew that at the age of 17 to 18, this is not really going to work. So I set out to prove that. And one thing that we have got so far that we can see is the economic shock that happened in 2008, the financial crisis, has rendered these countries very inflexible. They're not flexible enough to be able to adjust their imbalances. And therefore, countries like the United Kingdom, who trade 44% of our trade is with the EU, we, between 2008 and so around the COVID time, had interest rates that were so low because we couldn't really trade, we just were not growing fast enough. And that's a lot of reason because we were, a lot of our trade is with the European Union. And unfortunately, it has rendered these countries, particularly Spain, my wife is from Spain, and we were there all the time, and we can see the economic problems that they have there since 2008 has just rendered them rigid. They're really rigid. It's a very, very inflexible country. There are people there, and I'm not saying that this is a bad thing, but there are people there who had jobs in industry, heads of markets, etc., who find themselves sort of going out into the fields, sort of picking oranges for 30 euros a day, because there just is not an economy. The shock has been so great for them that they have not been able to get back into equilibrium. So I proved that what I thought 30 years ago was going to happen, did happen. And a lot of these European countries just cannot adjust. And that's why the PhD came about. I did that at Greenwich University. I took 3.5 years out to do that. I graduated PhD. I was very happy. And that's when I started to go into more consulting route to be able to help investors, help fund managers, asset managers, all these kind of people in their work. I got a phone call from a gentleman who said, I see you've got a really good experience in forecasting, economics, econometrics. Could you come and help me in this real estate business? So he set me up in this real estate consultancy. I learned all about real estate, etc. And I started my real estate consultancy from there. That's how I got into it. So I guess my job title would be an economist, econometric, forecasting expert in the real estate business, the real estate industry, I should say.
You've quite a very, very thorough experience and background. Where did you graduate your PhD from? Which university?
It's Greenwich Business School.
Oh, okay.
So it's in London. Yes, it's in London.
I'm going to put you on a private view just so the audience can just see you. I'm take myself off, and I'm going to ask you a couple other questions. I must say, if I'm looking at myself as the audience, I'm sure they are very impressed with your background, your family background, your knowledge. You've worked for Lehman Brothers, so you've worked from firms we understand in the U.S. But I want to ask at this point, I'm put you just on you, let you speak at this point. Share with us what motivated you to get into your work.
My current work, or the investment banks. Well, the motivation behind the investment banking industry to start with was a lot of the rhetoric we were seeing around sort of 1990s, 1991 was how the foreign exchange markets were reacting to so much economic news that was coming out. And you remember the crash in 1992 when sterling, the pound fell out of the exchange rate mechanism. This was a situation whereby I think the United Kingdom said that we're going to basically the European countries were trying to make sure that they aligned their currencies within certain bands. And this is where the EMS, Economic Monetary System, was formed. So if a particular currency floated a little bit above a certain band, it would be sold by traders. If it was too low, it would be bought by traders. But there came a time around 1992 where the sterling was sort of floating on the higher sort of echelon of the higher band against the Deutschmark. And, for about 3 or 4 months, our financial experts and our chancellor in the United Kingdom were saying, our exchange rate is where it should be and everything's fine, the economy is fine, but there was no economic reason why the currency should be as high as it was. So the traders, one day on the 16th of September, Wednesday, I remember this very well, they went and sold off sterling and it fell out of the exchange rate mechanism, which was how the currency devaluated. And that we were in a recession then, and that allowed our exports to grow and we were able to come out of recession at that time. And I said to myself, you know what, people there are doing a lot of good, they're making a lot of money out of just economic news. I'd like to do that. And this is sort of what sort of transpired me to do that, because I have a lot of economic knowledge. I was in an economics degree at the time. I started to understand how markets move and what happens. I remember during the summer, whilst everybody was on holiday in Greece and sort of sunning themselves up and all this type of thing, I went and bought a book. It was called 10 Times Economics. And this taught me every single thing about how the economy works and how people make money from economics, etc. And I read this book throughout the summer. I went back to my university, went into my I think my second or third year. And every single day I bought the Financial Times. This is a financial newspaper that we have. And I sort of tucked it on my arm. Anytime I had a spare moment, I'll sit down during lunch, I'll read the columns to see how markets move and what happens, etc. And that's how I learned about it. And that's why I got into this field, the investment banking. I think it's just fantastic. If you can sort of make money from economic news, if you know how the markets work, if you know why exchange rate, why if the US announced that the Fed are possibly going to cut rates, what's it going to do to bonds or whatever prices there were? So that's how I got into it. And I thought if I can relate my economic theory to economic practices and what happens in the real world, why can't I just go and make money from this? And that's what I did.
Now, I want to ask a question here because we're talking about the real world too. With the new administration, the new prime ministers, what do you anticipate, or am I asking the proper question in that context? What is your outlook on the future of how it's going to affect the economies or the pound or the markets? Give me your feedback on that.
Well, I'm hoping that a lot of the rhetoric we've seen from the incumbent, the new prime minister, is that he's going to let enterprise thrive. Because one thing we've had since Brexit was when the United Kingdom exited from the European Union, and there's a lot of uncertainty. There's very little investment for 3 or 4 years because we just couldn't get this deal through. One thing I do hope and I do think that the new prime minister will be to look at businesses. And look at businesses, they are the lifeblood of the country, and to make the economic climate for businesses so sort of attractive that we will get foreign investors. That's something we've really lacked for the last 7 or 8 years, for foreign investors to come in, put their funds into the United Kingdom, get growth, get stimulation going, because they've been talking about growing the economy. Lots of politicians talk all the time about growing the economy, want the economy to grow. The question is, how are you going to do that? And one of the main ways to do that is investment. And if you make the economic climate sort of investable, i.e. people coming from abroad and investing in the United Kingdom, I think that's how the country is going to grow. And I think he's sort of, whether he's the right person to, he probably is right. He's the man who's doing it now, so he's going to do it. I hope he really does put the UK on the map as far as the investment landscape is going to be, because that's going to be where our economy is going to thrive. I hope also that the sort of the green economy as well, that we're talking about net zero by 2050. That's really important. They're talking about sort of the UK green belt, having wind farms, all that sort of stuff. This is what they're talking about. I hope they will do it, and I hope they'll do it sort of quickly, so that we can also rely on our own sort of, rather than fossil fuels or sort of importing gas from all these other places, sort of Russia, wherever we import them from. We'll start producing our own. That will reduce the tax burden on people, which will stimulate growth, and then we can go and sort of thrive as an economic powerhouse, if you like, because I think we've fallen down the table a little bit in recent years, and I think we really need to start climbing back up. And I hope he's the person to do it. It's not going to take one term. I'll say maybe 2 or 3 terms. So that's a term is 5 years. 2 or 3 terms, he might be able to do that. So I think that's what he's going to do, and I hope he does do that.
I'm hoping so too. Let me ask you. So, with that in mind, for the common person, the average person, is there any suggestion you have for from the investment banking side? You're dealing with a lot of high net worth people, but there are a lot of average people. I know in America, a lot of average people invest in the market. We do a lot of mutual funds here. I personally prefer individual stocks. Do you do much forex trading? What are some suggestions or ideas, without going into too much detail, that the average person will be looking for going forward?
From an economic standpoint, or from their own sort of investing in stock markets and that type of thing, is that what you mean?
Whatever direction you want to take this.
Right. I think the ordinary person is going to look for less burden on taxation, because I think that the ordinary person, although the threshold for paying sort of the taxes in the United Kingdom has now gone up. I think we're looking to get a lot of people away from sort of a massive tax burden, because the prices in the United Kingdom are far too high. And I think that they are going to be looking, we are hoping that they are going to have a tax burden that's not so pressurized on their finances week to week, because a lot of people are in a lot of trouble. We call it struggle street here. And we shouldn't really, in a country like this, have people on struggle street. So we're hoping that the tax burden will be raised. We're hoping that the public services will be better, so people won't have to sort of pay so much for public services. The government has promised us that we're not going to have such a sort of big tax increases. If there were going to be tax increases, they're going to be taken from probably from what they call windfall taxes on oil companies and that type of thing, and maybe high net worth individuals, etc. So we're and obviously we know that the vast majority of people are ones on the sort of lower tax, and they're the ones who are going to be able to stimulate the economy and start spending again. So I think from their perspective, we're looking for a sort of the threshold and taxation to be raised a little bit more, get a lot more people out. Our goal now is to get more people out of what we call poverty, because there are far too many children in poverty in the United Kingdom, far too many. So we need to get them out of poverty. We need to increase the tax burden, and we need to reduce the tax burden by increases the amount of tax they pay on a certain amount of income. One problem we also do have in this country is housing. That is a massive, massive problem. 2%, I think it's something, I think they say 2% of the United Kingdom is actually built on. I think some people say it's maybe as high as 6%. The figures we're not too sure. But rents in this country are far too high. They're artificially high. And that's because the building projects that have been promised over the last 15, 16 years just haven't happened for one reason or another. And the average person in the street is finding themselves paying humongous rents when they really should not be paying so much rent. If a listing goes into a building that's maybe sort of, 2-bedroom apartment for sort of four people family, they are finding that there are 20 people who are already looking for that listing and willing to pay 30, 40% more for that particular listing. So the rents are going up all the time, and we really can't afford that. So we're looking for the house building, for this new government to make sure that they promise that they when they promise to say they're going to build houses and that kind of thing, make sure they do that. They must do that. We also have a problem here where we have a lot of offices. People now, because of COVID, after COVID, people are working from home. There's a lot of office space that's just not being used. So a lot of these offices can be sort of merged into one sort of center. And why don't we use this office space to create some affordable housing? I don't see anything wrong with that. I think that's a really good step, because I drop my children off at school every morning. I take a little bit of a walk to maybe buy a coffee, and I see people lying in the streets. And I think, how on earth do we have that in 2024 in the United Kingdom? That should never be happening. It should never happen, at any point. So I think this government also has a duty to really, really look at the planning laws. We need to look and see how we're going to solve that problem, get people off the streets, get people off struggle street, raise the burden of taxation, start building affordable housing, use some of those offices to put people into housing. And then we'll go on from there. And I think that's how the average person in the street is probably looking at things right now.
Your problems you have in the United Kingdom are very similar to the problems we have in the United States. Same thing with homelessness, people living on the streets. And it's a problem, I think, that every nation has to deal with. That's the reality we have to deal with, how we get people into job positions. It's really based on the job market. If you don't have jobs, if people can afford living, there's no place to afford a house. So it always boils down to that. But that also segues us into another area that you're strong in, that's in real estate. Give me some feedback on what you're doing in the real estate market and how you're helping people in that area.
Right, so my role, what I do at the moment is I set up a company called Affluent Asset Analytics, and what I do is I help high net worth individuals and fund managers, asset managers, to invest their funds with their stock markets wisely. And I look at growth areas. So I'm looking at 3 main areas: commercial real estate, we call them. So I look at retail outlets, I look at industrial warehouses, and I look at offices, main things. Not quite started looking at hotels. So these are the 3 main areas that I look at. And I look for rental growth in those areas, and I look at yields. One of the areas, without giving too much away, is we're finding that the industrial warehouses are quite attractive proposition at the moment all around the world. And that's a lot of it is because when you go into the high streets and you look at the high street shopping areas, they're gone because people are now a lot more online. And one of the places that people are looking to raise and to look at for industrial warehouse units, etc., are in places like maybe Lithuania, maybe Slovakia, places like that. The Eastern Europeans, where it's not so expensive, they can store a lot of goods there, they make a lot of goods from there, and they ship those out not sort of quite cheaply. Those are the sort of things I'm looking at. So I produce econometric forecasts for these individuals to be able to invest their funds into these kind of areas and diversify their portfolios. So if somebody's looking at real estate offices, for example, offices in Norway, just for example, might not be as attractive as offices in Switzerland, for example. There will be economic reasons for that. There'll be there'll be lots of economic reasons that would, I don't know whether they're looking to sort of urbanize or whether people are just not taking office spaces anymore. I research into all those things and I help people diversify their portfolio based on all these things. The other areas that I'm looking at are the green areas. This is really important now. The whole world has now got themselves into the green space, environmental issues, sustainability, and that type of thing. This is now the growing area, and I'm doing a really big sort of project on that, whereby I'm ensuring that I'm looking for areas around the world where the green spaces are now becoming more attractive. So people might be looking at whether it's residential or commercial, maybe offices in, I don't just off the top of my head, Luxembourg might be going a lot more green. So that's going to have sort of growth over the next sort of 10, 15, 20 years. And I do a lot of the calculation, I do all the maths for it to ascertain sort of yield income and sort of the yield income that people might get from their investment in a particular sort of portfolio. And I look at the rental growth in those over the sort of 5-year period, 10-year period. Someone might come to me and say, hey, what do you think about 3 years sort of, industrial warehouse and portfolio with Norwegian offices? What do you think about that? Can you do me a bit of a scenario on that? So I'll go away, I'll do the maths. I'll come back and I'll present it to them and say, this is what I think. These are my rental growth forecasts. These are my yield forecasts. And I have a full explanation as to why I think what's going to happen is going to happen. So those are the main areas that I'm concentrating on. One final area that I'm looking at is that I actually get, looking at sort of family offices, I actually look at getting people to invest in areas where there are large developments. For example, I have on my books at the moment, obviously not going to say the name, but there's a company that is investors, a family office, investing in a huge area around London, and they're looking for fundraisers. So looking for something to raise funds to be able to put into this particular investment and yield a lot of returns over the next however many years. So I get these people together, and I get the developers together, and I get the sort of the raise fundraisers and developers together, and I put them together, and obviously we have that sort of harmonious relationship. So I am sort of like a middle person between them, but I also advise. I don't advise. I provide the economic forecast and the research behind what I think is going to be happening in the next 5 or 10 years in that particular real estate area. I look at the regeneration projects. I look at urbanization. I look at migration. I look at people coming into the area. I look at people going out of the area. I look to see what economic growth is going to be. I look at technological changes over those sort of particular areas. And I would sort of get people one-on-one, we'll talk, and I'll provide these things for them. And they generally, hopefully, will go away quite happy. So that's sort of three particular areas that I concentrate on.
2 areas I want to talk a little off the cuff. And I know that it's either in Dubai or Saudi Arabia, where they are buying fertilizer from India to change the desert into green spaces.
Yes.
Tell me what's your feedback now, and what's going to happen is like they're going to change the topography of those countries because of the fact that the desert is no longer just going to be a wasteland. It's going to be a place where they can build a whole new part of that country. What is your feedback on that?
Well, absolutely, because these are one of the sort of growing areas. Dubai is a place that's obviously, as you know, very attractive. Sort of 40 years ago, it was just pure desert land. It was built on, and the way it looks now is absolutely brilliant. But the green areas, the green spaces, is where people are generally looking to put their funds in. That's a really big, the really big projects, and green is good. Now we have to get towards net zero by 2050 in the United Kingdom. Countries around the world are looking at that, and Dubai is one of these massive, huge spaces where lots of people are now flocking to. And it's one of those places where it's now becoming very, very, very investable. So I'm kind of all for all for that. This huge spaces where you know massive companies are going in. Still a lot of work that from sort of a lot of building work that was supposed to have been done that hasn't been done. Obviously, COVID sort of slowed those processes down, but now people are starting to go back, and as you say, they're sort of building on green, a lot of sort of greenery around those areas, and it's becoming really huge. Also, the newer markets, Mexico, for example, South Africa is another. That's another area. Singapore, Malaysia, these are now bigger sort of areas where people are starting to think about emerging markets and growing sort of real estate in those areas, and the green sort of section of those real estate areas. So those are big projects that are happening, and I'm all for it.
The opportunity to build property there, but also to grow new foods, you know,
Yes.
farming and so forth. So it's like they're building a whole new type of ecology.
Absolutely. And that's where sort of exactly, and that's one of the attractive things about those areas, that they are sort of having their own farming projects out there as well. So that's really good for people to very sort of attractive for people to go in there and you know, hedge their bets and put themselves, you know, raise funds and go sort of, you know, help the building projects over there. It's fantastic.
I want to ask you this now: how do people reach out to you? Who are the kind of people that are looking for you, and how do they reach out to you?
Yes, well, generally they're family offices. Family offices are, you know, they have a lot of real estate. They look for real estate, new projects, new markets, etc. I have a website, Affluent Asset Analytics, info at affluentassetanalytics.com. I'm there. We have a website there. It's just completing a rebuild, because we put a lot of other stuff in there. So they can reach out to me on there. Perfectly. I'm very, very happy to get people out and have sort of one-on-one discussions with them about these things, how they can invest their funds, etc. But I think one thing they really need to remember with me is that I don't advise. I provide the research for them to make their own decisions. That's really important to know. But yeah, that's how people can reach out to me.
That's excellent to know. My other thing is that I want to share a little bit of your success story. Tell us some things you're very successful. I think the public wants to know that. And before you answer that question here, I want to ask you another thing. You're in the United Kingdom, but your services are also beneficial to people in the United States or other parts of the world. Can you share that with our audience here?
Correct, yes. I live in the United Kingdom, but I'm completely global. So people who are sort of developers, brokers, fund managers, asset managers, whether they're traders in real estate, whether they're ordinary investors, or whether they're high net worth individuals or family offices, my services are here. I provide the services to be able to let people make their own decisions and make wise decisions. And I think one of the things that I've learned myself is that I taught myself. I'm quite self-taught. When I did my PhD, one of the things I found that was quite frustrating was that I needed to do something called econometrics, which is the mathematical side of statistics. So without doing that, you can't graduate. You just can't do anything. Very frustrating, because my supervisor had two supervisors who didn't really know very much about econometrics. In fact, barely knew how to spell it. So I had to I went to them and said, look, how can I sort of, you know, can you sit down and teach me this? This was their job. And they said, well, we can't really do this because I don't know how to do this. They sort of did their PhDs when sort of the abacus was a thing. But so I went out and I set my goal and said, I am going to study how to do the mathematical and statistical side of things. It took me about 3 months to learn almost every rule about econometrics, about how to get data in, metadata, how to comparable data, all these things. There's so many rules, making sure the variables are the same, whether they're first difference or data. Anyway, I won't go into technical stuff, but I'm very self-taught. And I find that when you teach yourself things, you will never forget it. You will never forget. So that's one of my sort of fortes, or one of my success stories, is that I actually taught myself my, you know, how to do the mathematical side of things. And sort of my forecasting now is my forte. I love it. I do it. And one thing I always do is I look at my forecasts and see how, sort of 3 or 4 years hence, to see how accurate they were. and they're very accurate. I'm quite happy to say that they're quite accurate. So not the easiest thing to do that. So that's one of my success stories. And at the end of my PhD, I had a viva. So the viva is the sort of it's the little exam. So it can be a half an hour, it could be a 7-hour exam at the end of a PhD. And my examiner was a guy who had anything that he didn't know could be written at the back of a postage stamp. He's that good. He's written so many books and so many articles about anything to do with the European economics, which was my major. And he examined me over 2.5 hours, and he grilled me. I thought it was just going to. People told me, "Oh, your viva is only going to be a celebration of your work," and they would ask you, what was this variable employment? Why did you use that, etc. It wasn't that at all. He literally nailed in, page 35, line 12. You have this figure, 0.35 GDP versus deficit, or whatever. How did you get that? It literally was an absolute grilling on very, very, very specifics of my PhD, how it sort of revolves around the real world, how it makes how did it make sense at the time. And so he would go back to the mid-80s, and I was thinking, my goodness me, mid-80s, I have to remember what happened then, but at the end of the viva, it was very good. I passed with flying colors. I didn't know that he had actually examined Oxford and Cambridge PhDs before. I think if I'd known that, I would have asked the change examiner beforehand. But anyway, I passed with flying colors, and sort of it went around the school. Oh, yeah, Victor's passed his PhD and he's did really well. It's one of the best that's ever been done here and all that. That's one of the success stories. So I took that as to sort of saying to myself, you know what, going to this big world, you know what you're doing. And that's why I became a consultant, because then off the cuff, I was just able to advise people or just, help people along the way, making their wise decisions, forecasting, whatever it was. And so that was how I got into it. That was really good. So very, very pleased about that. And here I am still going strong.
I think too, when a person goes into business for themselves, you put more of your heart and soul in what you're doing. I worked with the investment industry all of my life. And I can tell you, I had my own business in the early part of my career, then worked for an investment firm the bulk of my career, and now I'm back at the other end of my career. I'm back on my own, and I will tell you the difference. I put a lot of my heart and soul in what I do. I'm not there to compete with anybody else on getting numbers. I give my clients the very best advice, and because I do family office, there are a team of people that help make that decision. There's no one person, so the client gets the most objective decision of all. I really like talking to you, and I'm hoping that we can introduce you to other people here in the U.S. as well as part of Europe.
Absolutely, that'd be great.
That's the whole purpose of our show. We went from 6,000 views to 25,000 views in 30 days.
Wow.
Yeah.
Wow,
30 days.
that's quite a number. Yeah.
Well, I had help on learning how to reposition, how we put ourselves in, our videos are positioned and how we market them. But I really like having different types of speakers on. I don't know if you had a chance to look at our show, to see some of our videos, but I look for quality people like you. I certainly appreciate talking to you today.